And many retailers see a tough year ahead. Discount stores are reporting mixed earnings. Dollar General's fourth quarter results out today, missing on the top and bottom line. Five Below eking out a beat on both revenue and profit, but the stock is falling on soft guidance. For more on this, we're joined by Corey Tarlowe, Jefferies Vice President Equity Research. Corey, let's start out with where the consumer is at from what we're looking at with these earnings. I just peeked at Dollar General's, their transcript, and what they were talking about as far as the consumer, management saying that they're continuing to see a consumer shift spending to more affordable options, including their private brands. From what you saw in these earnings, how is the consumer shaping up?
Well, I think one thing that's clear, and this is rather universal, it's that consumers are continuing to trade into value channels like the dollar stores, and they're continuing to trade down into private label categories. So as a result of the consumer buying more on credit and having a lower savings rate as well, so balance sheets are becoming a little bit more stretched, the consumer is being much more intentional with her dollars, and she's going to places where she can stretch her dollar a little bit further. And that really does, to be quite honest, benefit Dollar General to a really meaningful degree. And we saw that in the fourth quarter, absent a storm that had disrupted the sales around the late December holiday timeframe. So with comps that were near 6%, sales up close to 18% in the fourth quarter, with over 1,000 stores that are going to be opened in the coming year and share gains across categories, I think that the setup is actually one that's fairly attractive for Dollar General as we look ahead.
Corey, what about the fact that more of the consumers are shopping for groceries at Dollar General, struggling here, though, to persuade some of those shoppers to buy other things within the store? And we know when we talk about the grocery division that it is a lower margin business here. How big of a challenge is that potentially for Dollar General now?
So Dollar General is actually in a little bit of a unique position. And you bring up a really great point that consumers are, again, shifting a little bit more into what they need as opposed to what they want. And as they shift into what they need, they're shifting into items like food, very simply. But what's unique about Dollar General specifically at this time at present is that it's brought now its entire fresh distribution supply chain in-house through an initiative called DG Fresh. And what that's unlocked is the ability to drive higher initial markups on inventory purchases and actually drive much better profitability within this category. So at a time when, again, consumers are prioritizing what they need over what they want, Dollar General's profitability initiatives to, again, bring the distribution of these goods in-house really does play well into the current backdrop and bodes particularly well for profitability for the business over the next 12 to 18, even 24 months.
Can you talk to us a little bit about how important it is for these dollar stores to open up new stores or to have these stores? Because Five Below is planning to open a record 200 stores in 2023. That's up from 150 new stores in 2022. So talk to us a little bit about that strategy of opening stores everywhere and anywhere.
Well, Five Below is not in every state in the U.S., and they're growing stores at one of the fastest rates among retailers in the U.S. And so Dollar General is the largest retailer in the U.S. They're growing at a rate of 1,000 a year, but on a growth percentage, that's only about 5%. Five Below's store growth rate is actually about 15%. And what we found more and more is that even despite the shift online as a result of COVID that we've seen really exacerbate this trend, consumers are still going to stores, and being in a location that is convenient with a value offering really does go quite a long way to driving consistent and stable sales and profitability. And Five Below and Dollar General are two of some of the best retail unit expansion stories in retail at present.
And as far as wages are concerned and labor, I mean, we know that we've been in a tight labor market. Dollar General, in their earnings, were talking about their wages, that wages have increased 23% over the last 3 years. What kind of impact is this having on these companies?
Well, certainly wages have been rising. I'd say that Dollar General, on average, the wage inflation tends to be about 3 to 4% a year. In the past year, we'd probably see the rate be a little bit higher than that. And I expect that as inflation continues to moderate, that the rate of wage inflation likely continues to come down as well. So that should actually, in fact, alleviate some cost pressures on valued retailers generally across the space. Now, Dollar General is actually making an incremental $100 million of investment into labor hours, mostly, which is really going to help to service the consumer better, as these stores are going to be more adequately staffed with better in-stock levels, and it should help to drive much more consistent levels of sales within the Dollar General enterprise.